Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler in studio here at the New York Stock Exchange. Well, investors are gearing up for one of the final weeks of 2024, and it will include a decision on interest rates from the Federal Reserve. The central bank kicks off its two-day meeting tomorrow on Tuesday, with its rate decision coming at 2 p.m. Eastern on Wednesday. Traders anticipate a more than 90% chance that the Fed will lower rates by another 1/4 percentage point, according to the FedWatch tool. Well, the major indexes have had a banner year in 2024 on the back of solid growth and a post-election surge that has the S&P 500 up nearly 27% year to date. We'll be covering the Fed's upcoming decision all week long, including in today's show. Let's take a look at what else is on tap this hour. The retail sector is in the spotlight this holiday season, and we don't just mean those long lines at stores and record-setting online traffic. We'll set the scene for the release of November retail sales data from the U.S. Department of Commerce. That comes out tomorrow morning. And after the average 30-year fixed mortgage rate surpassed 7% earlier this year, we'll get an update on how much inventory will be available for potential home buyers in 2025. Of course, at 9:30 a.m. Eastern, we'll take you to the opening bell right behind me as MFS Investment Management, which has been operating for a century, rings the opening bell. I'll be joined by the firm's CEO about why the company, it feels like now is the best time to debut its 5 new ETFs. All right, well, first, let's home in on what will be a very busy week for the markets and, of course, the U.S. economy at large. The marquee event will be none other than the Federal Reserve's final policy decision of the year. That comes on Wednesday. Joining me now is Kathy Bostjancic, Chief Economist at Nationwide. Kathy, thank you so much for joining. And what is your expectation when we hear from the Fed on Wednesday?
Well, good morning. Happy to join you. So our view is they're going to cut interest rates 25 basis points. We've had that view for quite a while, and now it looks to be, largely a done deal. Markets, as you mentioned, are pricing about 97% probability. We've gotten no pushback or signals from the Federal Reserve that indeed they would not, go ahead and cut rates. I think what's going to be more interesting, though, is the guidance that they give us. They'll give us a whole set of updated macro and interest rate, or the so-called dot plot estimates, and also, as always, the press conference by Chairman Powell will be really important. Our view right now is that they probably pause the rate cutting cycle in early 2025. They first want to assess any prospective policy changes that are going to come out of the Trump administration. We know there's lots of talk about tariffs, and could that feed through to higher inflation, scale back maybe on immigration. It may be even a little too early for them to assess that fully, but they can take stock of current economic activity and inflation at that point, and just slow down the pace of rate cuts for next year.
Mm-hmm. We've seen support build around the president-elect's economic agenda. Kathy, what are your expectations for growth in 2025?
Yeah, I think, first of all, the economy is still quite strong right now. So we've got a lot of positive momentum as we head into 2025. And we think that continues. And we do look for some moderation because we're seeing the cyclical sectors of the economy cool off a little bit, but not dramatically. It should still remain pretty solid. We're looking for growth that's probably a bit below 2%, but still very respectable. Where the uncertainty lies really is, what do we get in terms of trade or tariff policy, immigration changes, also deregulation. And on the positive side, as the equity market is soared higher and business leaders are optimistic that deregulation will propel the economy. Now, tax cuts or tax extension of cuts that were enacted under the first Trump presidency, we really just will hear a lot of talk about that next year. But we actually don't get, that's not until the end of next year that they need to be extended or not.
Mm-hmm. Let me ask you about some of the data coming out this week, Kathy. Of course, we discussed the Fed decision on Wednesday. The market, by and large, agreeing with you, pricing in a large percentage point chance that the Fed actually does move forward with that 1/4 percentage point rate cut. We'll also have data like retail sales, among other reports coming in. How is the consumer holding up? As we know, consumer spending does fuel the vast majority of our economic growth.
Yeah, consumer's been incredibly resilient. And when I say resilient, it's not as if it's bouncing back from weak growth, meaning resilient in the face of still high price levels and sticky inflation and high interest rates. So aggregate consumer spending, retail sales should be on the healthy side here, especially during the holiday season. Now, if you look at the breakdown among different households, the upper income are feeling the most flush right now. They have this tremendous wealth effect going on. Home prices up, the equity market up, and their wage growth is more than kept up with inflation. When you move down the income spectrum, it gets a little tougher, especially the lowest quintile. They're struggling right now with high prices and high interest rates. So they're going to be a bit more cautious. You see more price-conscious spending on their behalf.
Mm-hmm. Of course, we'll see how that impacts inflation as well. Inflation has been stickier of late, and I've had other economists join me who think that perhaps that goods sector, when we look at the pace of price gains, Kathy, in the new year with the new administration and a new economic agenda, that if tariffs, for instance, are truly enacted, as President-elect Trump has promised during his campaign, that we could see the pace of price gains on goods pick up at a time where we are starting to see some softening, much needed softening, I think many people would say, in the services sector, like rent, for instance.
Yeah, I would agree with that, concern. We certainly, the good news, right, as you mentioned, is rental inflation looks like it's finally cooling. We've seen that in the last few months, and we think that continues. We've also seen transportation costs, repair costs for autos, motor vehicle insurance costs, all of that easing, and we think that continues. So that really helps the service side, which, as you pointed out, has been the sticky part. The core goods, we've seen an upturn on the monthly readings most recently. We don't think that's necessarily sustained. Like a used good car prices popped, new car prices are higher. Some of that was related to the hurricanes, but you're right. If we get tariffs and the tariffs are passed on to the consumer level, that's going to show up in the goods sector. So something we have to be watched. We're hopeful, but we probably see the underlying trend for inflation still be, disinflation, but we could see a little bit of upward pressure from tariffs. How the Federal Reserve reacts to that will be interesting. Do they look through it as they were inclined to do under the first Trump presidency, thinking, well, this is not really a sustained inflationary pressure? Or do they get worried that maybe this could be, this time we have, a slightly stickier inflation backdrop? Would they be worried about that? And that could cause them to cut rates less for next year.
Kathy Bostjancic, chief economist at Nationwide. Kathy, great to get your take, especially as we set up what will be a busy week with the economic data very much in focus.
Thank you very much.
All right, everyone, will stay with us because up next, retail sales, more economic data are on tap. Tomorrow we'll get that data and an industry expert will weigh in up next.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honour, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement, that extends from everything from community to ESG in general to environmental stewardship. And they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Hekla that really is driving forward the company's success.
Now, what strategic direction would Hecla take under your leadership, and what will be some of your key priorities for Hecla?
As the largest silver producer in Canada and the United States, Hecla really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio, and that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schiller here in studio. While the looming Fed decision is the marquee event of the week when it comes to the U.S. economy, data released tomorrow, early tomorrow, will tell investors the story of what's happening in the retail space. My colleague Trinity Chavez has more on this story. Trinity, good morning.
Hey, Kristen, good morning. The Commerce Department will reveal retail data that is going to be revealed during the month of November ahead of tomorrow's open. And economists are expecting that there will be more signs that consumer spending is driving the economic growth. The latest estimates forecasting month-over-month growth of 0.5% in the month of November, continuing the theme of month-over-month gains we saw in both September and October. Shelby McFadden, investment analyst at Motley Fool Asset Management, is joining me now. Good morning.
Morning. Thanks for having me.
It's great to have you on the show. Let's just dive into this topic right now. What expectations for the retail sales data that are being released on Tuesday that you think investors should be on the lookout for?
Sure. I mean, at this point, we're kind of looking for something a little tepid, right? We don't want anything to be too robust because then that could be a signal to the Fed that says, hey, things are looking a little bit healthy. But we also don't want anything to be too slowed down. The same way we kind of look at PPI. No one wants to get excited about PPI being a little bit too low because that signals that, buyers are looking to slow down a bit. So I think coming out of this next set of data, it'll be a little bit too early to get too much of the holiday shopping. So I imagine it'll be a little bit cleaner than normal. But I think investors should want something that says that consumers are settled into the current economic conditions, nothing too robust, nothing too slow, but also not to get too hung up on it because we are in a sort of interesting season and the retail data doesn't always reflect exactly what people need. It's a little bit more discretionary.
Shelby, can you elaborate a little bit more on what you see right now with the current economic environment and how it's impacting consumer spending during the holiday season and which retail segments might fare better under these conditions?
Yeah, so what we're seeing right now is sort of a continuation from what we've seen out of sort of the earlier part of the year and late in 2023, which is a deferral of the large discretionary purchases. And so because we are in Q4, we're in the holiday season, we might see people getting some more things like washing machines or things like that because they are marked down. So we probably saw a bit of a deferral of purchases from the earlier part of the year waiting for those sales. But on the whole, if we sort of strip out inflation and compare, we're seeing a bit of reduction there. The way that we approach it at Motley Fool Asset Management is bottom up. So we're looking for those companies that are going to be the most competitive. They're going to have the strongest sales when everyone is in the same storm. They're offering the most value. They have bigger scale. They have high quality operators because then we don't have to time the market when the macro component comes back to benefit everyone that's in play.
Now, when evaluating retail stocks through a bottom-up approach, what specific qualities or metrics do you specifically look at in a high-quality operator, and how do these indicators signal long-term success in this sector?
Sure. So when we're looking at operators, that sort of falls under one of our 4 pillars of quality that we call management, culture, and incentives. So we're taking a look at one, what's their incentive structure? How are they paid? What is motivating them? And then we're also looking at things like what exactly is the ROI under this particular operator? How do the CEO and CFO work together? Have their plans succeeded? How has the M&A paid off for the business? So we're really drilling into those subjects because it can get really easy with some of the mega scale operators to just kind of ignore what they do with extra cash. Oh, they're sending a dividend, they're doing some buybacks, that's great. but we really have to look in and see what else could they be doing? Are they reinvesting in the business? And what are they buying? Just because it's affordable because they're large doesn't necessarily mean it's paying off. So we're taking a really good look at that to make sure that they are maximizing what they could be doing for the business and for shareholders.
Now, NYSE listed company Walmart has consistently demonstrated resilience and strong performance despite economic headwinds. What would you say differentiates this company from its peers, and what would you say some of your stock picks are?
I think what differentiates Walmart from its direct peers really comes down to the value that they offer and their operators. So when we look at Walmart, they are very agile. They move quickly with the environment. So they are able to be very flexible with workforce. Because of their scale, they're also able to very quickly sort of wind down any partnerships that might be sort of sucking through any extra profit that they want to see come down to the bottom line. So they're able to move very quickly. They also, because of the scale of their supplier network, can move quickly when it comes to adjusting prices to bring that value back to their customers. And that's really something that sort of glues them to the American public, is that between Walmart and Costco, it's clear that they are looking out for customer first. So when we sort of set aside the quality issues that might hit certain regions, which is something that we need to hold management accountable for, on the whole, they are trying to make sure that the average American family can access not only their necessities, but some of the discretionary purchases that they might want to, because just having shelter, food, water, soap is not enough to actually bring a full smile to the heart. They want their customers and households to be able to treat themselves as well.
And what impact do you think this retail data that's released tomorrow will specifically have on consumer-focused stocks, or ETFs for that matter?
Yeah, I think it's going to be similar to what we have seen when CPI would come out and what that would largely do to small caps versus large caps. I think if the data leans any one direction, we'll probably see in the first few hours of trading an overall sort of smackdown, if you will, and then an adjustment for realizing that there are going to be outliers. There is a chance that the market, knowing companies like Walmart and Costco tend to fare better, that they kind of leave them out of it a bit. But it really all depends on sort of how the market sees that risk. We know that the market sometimes assesses things differently than we do, even in the most well-known names. So I would imagine that if things are more than a little slow to the point where we're starting to get concerned about missing that soft landing, then we could see things come down a bit. If things are more than a bit aggressive, then we could also see things come down a bit, because now we're looking at that section of, is the Fed going to potentially turn, slow down in the decreasing of rates? So if it's anything but just right in that three bears scenario, I think we'll see a movement either direction.
A lot to look out for. Thanks again, Shelby McMadden. She is part of the investment analyst at Motley Fool Assessment Management. Thank you. Coming up, potential home buyers are hoping there is more inventory in 2025. Our next guest tells us whose those wishes are, and we're going to break that down. All that and more right after this break. Viewers, a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware, and then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for then the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio at the Stock Exchange. Well, 2023 and 2024 saw mortgage rates surge north of 7% at various points, leading to homeowners staying in place to lock in lower rates that they already had, and inventory for potential buyers dwindling. Well, last week, the National Association of Realtors released its 2025 forecast, and in addition to expecting rates to stabilize at 6%, the NAR is projecting there will be 4.5 million existing home sales and nearly 1.5 million housing starts in 2025. We have a whole host of housing data on tap this week. So with more, I do want to bring in my guest, Melissa Cohn, Regional Vice President at William Ravis Mortgage. Thank you so much for joining, Melissa. And what is your expectation when we get the housing data today, this week?
I expect that we're going to see that, not much has changed so far, but we're hoping that as people realize that rates have probably stabilized in the 6 to 6.75% range, that there'll be more interest in getting back into the marketplace. I've certainly seen more people coming to the understanding that, this is the new norm and it's time to get going and move forward.
Mm-hmm. Now, I'm curious in terms of what we see with inventory, with rates where they are, do you expect any more positive trends on the inventory front?
Well, I think that people realize that, yes, they're locked into a low rate, but they need a bigger home, they need to relocate for work, they need to downsize, that, we're not going back to 3%, 4% rates anytime soon, probably never again. So it's, people are just going to have to get on with their lives. And I think that it's, people need to realize that it's just time to, get going.
Mm-hmm. The market's by and large expecting another 0.25 percentage point rate cut by the Fed at its final decision this year. That's going to come Wednesday afternoon, 2 p.m. Eastern time. Melissa, do you think it is the right move for the Fed to lower rates again? And what will that mean for the housing space?
Well, mortgage rates are not tied to the Fed funds rate. I think that, what the Fed's final decision will be will probably be based in part with what they see with retail sales tomorrow. We've seen that the consumer continues to spend money, the jobs market remains strong, and, the Fed cutting, I don't think that it's going to move rates one way or the other. I think what will potentially move rates is what Mr. Powell has to say about expectations for 2025.
And what are your expectations for 2025 that we might hear from Powell Wednesday afternoon?
I think he will probably acknowledge that we need to take the policies and agenda of Mr. Trump and his new when he takes over as president in January, and whether or not those policies, especially those on tariffs, immigration, and tax cuts, are going to be inflationary, and that the Fed needs to be cautionary because they do not want to reignite inflation. Mm-hmm. So future rate cuts may be put to the side until we see what happens with the incoming administration.
Mm-hmm. And in terms of the jobs market, Melissa, we'd seen a bit of a softening of late. Of course, October was an outlier. We had worker strikes and several major hurricanes as well. Those numbers were revised higher when we got the report early December. But in terms of the trend of the jobs market, as consumers continue to spend, are you optimistic that jobs growth will be healthy in the new year?
I don't see anything that's changing it, and the fact that Mr. Trump is so pro-business that hopefully that means pro-hiring and will keep the employment sector strong. I don't see anything really changing. There's been no sort of negative currents that are going on that could totally slow things down dramatically.
Mm-hmm. It's interesting. South Florida saw a lot of demand, of course, during the pandemic as people left the Northeast cities, including New York, for instance. Are you still seeing a high demand across that region now?
Activity, obviously we're here and, the holiday season has calmed down as we head into Christmas, Hanukkah, New Year's. But the marketplace has been decently strong in Florida. I continue to see activity, on both sides of the state.
And in terms of what else might be on the horizon, Melissa, what is on your radar as we approach the end of the year?
It's going to be a wait and see to see what happens with Trump and how quickly he can get his policies into effect and to what degree they will be enacted. Hopefully they will be moderate from what he really wants, and that hopefully it will not ignite inflation, and that we could hope to see things settle down. If the volatility factors decrease, that perhaps we can see mortgage rates come down, even if bond yields don't drop dramatically.
Melissa Cohn, thank you so much for joining us. Of course, as we await the opening bell, Melissa is a regional vice president at William Ravis Mortgage. All right, well, stay with us, everyone, because up next we will have that opening bell on the podium right behind me.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that market's pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we have this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, in just a few moments, MFS Investment Management will ring today's opening bell. And I do want to bring in Trinity Chavez with more about what this firm is here celebrating. Trinity.
Hey, Kristen. So MFS, which has been in business since 1924, has officially entered the ETF space. Now, the company is celebrating the launch of their first ETFs, which listed directly on the NYSE floor earlier this month. Later on in today's show, we're going to be speaking with members of the executive team to find out why now was the best time to launch these new products and how it aligns with the firm's long-term vision. And speaking of products, MFS Investment Management introduced the first U.S. open-end mutual fund in 1924 called the Massachusetts Investor Trust. Now, Mike Roberge, MFS's investment management chairman and CEO, will ring the opening bell in just about 30 seconds, and he has been with the company for nearly 30 years and has served as the company's CEO since 2017. In fact, we're hearing the crowd just ramp up right behind us as we're getting images right now of the whole team there on the bell podium, Kristen. The crowd is erupting just right below us. I think that we should tune in to that opening bell, and we'll catch you on the other side.
To the races. The stock market officially open for trade in one of the final weeks of 2024. What a run it's been for the major indexes. The S&P up about 27%. I do want to bring in my guest to talk more about markets. Thomas Hayes, Chair and Managing Member at Great Hill Capital. Thomas, always great to see you, especially as we get set to wrap what has been a very eventful year.
Yeah, no question about it. They're excited down there, and they have every right to be, because I think we're in the period, Kristen, where seasonality is becoming favorable. We just got through tax loss selling season. We saw some weakness there the last week. People were getting nervous. A little bit of anxiety about the Fed meeting this week, but it looks like for sure they're going to be cutting 95% plus odds of a cut this week. So as we move out of tax loss selling season, guess what comes to town? I think we're moving towards the Santa Claus rally, a little bit of strength into year end, despite having such strength all year long.
Yeah, it has been a lot of strength that we've seen here, and expectations, I would say, are pretty high for 2025. How does that set us up in the markets?
Yeah, I think one of the things that is critical that's happening right now is a global easing cycle. We've had 64 Fed cuts so far this year, another one on tap hopefully this week. And that is the most amount of easing that we've seen since 2020 and 2009. So while it feels toppy, those were periods when you wanted to be a buyer of stocks, not a seller of stocks. But I do think it's going to be nuanced moving forward. As a matter of fact, when we look at correlations of individual stocks, going back to 2001, correlations are now at the lowest level. And what that boded well for was not a continuation of tech, which you saw into 2000, but actually a wide broadening, in our case right now, the unmagnificent 493. And what you saw in 2001 to 2007, small caps started to dramatically outperform.
Yes.
And believe it or not, emerging markets, which no one is positioned for, no one's interested in. It's American exceptionalism, no one wants those stocks. But if you go back to Trump 1.0, they did quite well.
Interesting. So you seem to be optimistic on emerging markets. Is that the case, Thomas?
I think you want to have some ex-US. I think you want to have some emerging markets. I think you want to have some non-US. And I think the US will continue to do fine. I think we have to have a little bit slightly more subdued expectations. You know, we're not necessarily going to get 27% two years in a row or plus 23 years in a row, but I think it'll be okay. I do think you'll see some moderation in the heaviest weights in the S&P 500, which will weigh on the indices. So 2025 stock pickers market, if you're in the indices, you're going to be okay. You're not going to be throwing parties, but 8, 10, 12%, you're happy. Underneath the surface, you can make a tremendous amount of money in that type of environment. That's where stock picking, fundamental analysis really come to bear.
Let's talk about some of the sectors, as well as perhaps some of the stocks on your radar.
Yeah, I think it's time for XBI. I know we've been on together. I've talked about biotech. Well, they've finally come aggressively off that bottom. It's taken a couple years to consolidate the losses. And now we're at the level where I think the next phase we're gonna start to move higher. I think you've got two things working in favor: deals and drugs. So deals, FTC is going to be much more favorable with mergers and acquisition, and drugs, FDA is going to be putting things out more aggressively. Couple that with the fact that large pharma has more cash on the balance sheet than they've had in decades, and they have a lot of drugs coming off of patent. So it's much easier to buy innovation at low valuations, historically low valuations in the biotech sector, than build it from scratch, which takes a lot of time. So we like biotech.
What does this mean for volatility?
That's a good question. Moving forward, look, we're at very compressed volatility right now. Historically, what you see is strength into an inauguration, and then afterwards it gets a little choppy. So it wouldn't shock me if we got a little bit of volatility late January, early February, normal pullbacks, 5-10% type of pullbacks, and then a modestly good year for the overall indices next year.
Interesting. And in terms of the new administration, of course, we saw the president-elect here at the stock exchange on Thursday, as well as many different members of his cabinet. How is that shaping your investment thesis, Thomas?
You know, it's pro-business, it's let animal spirits run, it's deregulation. This is a very positive thing. We want to be in those companies that have actually been beaten down. You know, one of the companies we like, which you can't give it away right now, is called VF Corp. Okay, Bracken Darrell is the new CEO for the last year. He came from Logitech. At Logitech, he took a stock that was down 82% and created a 25 bagger in 8 years. He's doing the exact same thing. He's taken solvency risk off the table by selling Supreme, paying out $1.5 billion of debt. He's got the new collaboration with Kim Kardashian, North Face and Skims, that's going. Vans is stabilizing, Timberland is a solid brand, and Dickies will do okay. So we definitely are betting on Bracken Darrell here.
Is Bitcoin on your radar?
It's not. I'm an equity manager. Kudos, there are a lot of ways to make money. For me, that's not one of them, but I've got a lot of friends that have done extremely well in the crypto space.
Very quickly, in just about 20 seconds, Thomas, anything you want to hear in particular that will shape your thesis from the Fed chair on Wednesday?
You know, it wouldn't, number one, I think he's got to acknowledge that he's still in an aggressively restrictive stance, number one. And number two, it really wouldn't surprise me if he does pause for a while, and I hope I think the market is prepared for that. Get that cut in. He front-loaded a lot of cuts, and then maybe see what happens for the next few months before you get too aggressively. Let's watch the inflation numbers. But I think maybe one, maybe two cuts may be all that's needed in 2025 after this.
All right, Thomas Hayes, Chair and Managing Member at Great Hill Capital. Thomas, always a pleasure. Thanks so much.
Thanks for having me, Kristen.
All right, well, stay with us because after the break, the CEO of one iconic fashion brand will tell us what he has seen across different generations during this holiday shopping season. Stay with us.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like we have autofill for 3D. We can improve supply chain decisions so that you're able to find the same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been just fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. And that really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions. You know, is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. While consumers are often looking for the newest and trendiest clothes, one brand in particular has been expanding its presence for more than 130 years. Trinity Chavez has more.
That's right, Kristen. So since 1890, the United States Polo Association has been a leader in the sport of polo, and its official clothing brand has become a global lifestyle powerhouse sold in over 190 countries. Joining us now to discuss the legacy behind the brand and the holiday shopping season is Michael Prince, President and CEO of USPA Global. Michael, welcome to the show.
Thank you so much for having me.
Absolutely. Now, the holiday shopping season has grown longer with early sales starting as soon as October, as you know. How has this shift impacted consumer behavior, and what trends have you noticed compared to previous years?
You know, what we noticed is that holiday did break early, but it's been a very strong holiday season. When I think of great brands like US Polo ASSN, we're comping up about 5 to 7%. Through the holiday period, both online and in store. So it's going to be another record year for us. This is our 4th record year in a row as we approach probably $2.6 billion around the world. And what we've seen is that consumers are looking for deals, but they're still gravitating to great destinations and great brands like a US Polo ASSN. A Viore is a great brand that's privately held that's doing wonderful. A Dick's Sporting Goods, a Walmart, those great specialty retailers, great distribution channels, and great brands are, I think, outperforming the general marketplace.
Are consumers being more selective, and how is that influencing the types of items that are being sold, especially in clothing?
Well, what we've seen is that consumers are still looking for great deals. One thing about US Polo ASSN, we're a great price to value proposition. So what I like to say is we give consumers great value throughout the year. But in the holiday period, we'll have certain items that will discount a little deeper. Doorbuster items that really entice the consumer. And I think the consumer, they've been stretched over 2024. Inflation's been sticky, interest rates are high, gas prices are high. And I think consumers, no matter where they're shopping luxury, all the way down to more of the mass market distribution channels, they're still looking for great opportunities for their families.
Now, which generation of shoppers, when it comes to Gen Z, millennials, or boomers, is showing the most enthusiasm for holiday spending this year? And are you seeing different trends when it comes to who's shopping in brick and mortar versus online?
One thing we've noticed globally, and I think it's in our brand particular, is that we really resonate with a young millennial, Gen Z, Gen Alpha consumer, whether it's in the United States, India, or around the world. So we're really resonating with that consumer, and we've seen really strong growth across that demographic. One of the other trends that we're seeing for ourselves, as well as throughout the marketplace, is anything that's digitally purchased, cyber purchased, mobile is outpacing anything else. So I think mobile purchases are in the high 60s, low 70s. We've seen that ourselves. So those consumers are purchasing with their mobile phones rather than on desktops, iPads, etc. So that's a trend that continues to grow and that we're seeing very strong momentum around.
And clothing often tops the list for holiday shopping for many consumers around the world. How have you observed, have you observed any specific shifts in style preferences or brands or even price points this holiday season? And what does it tell us about your consumer?
Well, for our consumer in general, and you said it earlier, so we span 190 countries worldwide, and we're a great price to value proposition. So I feel like US Polo ASSN really has a good heartbeat on the pulse of what's happening around the world, not only in the United States, but in other markets and in other regions. And we offer these great core basic items like a pair of denim jeans, polo shirts, and the consumer really comes to us for that sort of classic Americana, a connection to the sport of polo, authenticity, looking for core items. And then we have a few fashion items as well, but for this brand, it's more about buying the basics and having a great product for your family. For other brands, I've seen like an On Cloud or Hoka, innovation that works. So I think as a brand, you need your storytelling to be authentic, whether that's tradition, whether that's classic Americana, whether that is something around innovation as well. And all those things seem to be working for the consumer. but they're still always looking for a deal right now. Everyone's looking for deals through the holiday season.
Absolutely. And I do want to ask you another question as we move into 2025. We talked earlier about how we're seeing these deals happen earlier on in the year. I mentioned October earlier, but how can brands adopt a year-round deal strategies such as creating their own Black Friday moments to drive consistent engagement and sales throughout the year?
Well, I think the most important thing brands can do is build a relationship with the consumer. And so they're coming to you because it's not a transaction, but there's a relationship. For instance, for us, we give the consumer this beautiful magazine called Filled in Fashion. We distribute electronically to 8 million consumers around the world. We have a loyalty rewards program. So I think it's very important for brands to build that relationship and to offer the consumer opportunities to engage in promotions and discounts as well throughout the year. And then when you look at the holiday season, that way you're not as strapped for the last 60 days of the year to try to make your numbers and to try to be profitable. So I think it's having a good strategy going in and then being thoughtful about the consumer and how you engage while still offering deals throughout the season, and then maybe getting a little bit more aggressive during the holiday season.
Thank you so much for joining us, Michael Prince, CEO and President of USPA Global.
Thank you again, and happy holidays.
Happy holidays. Coming up, we're going to speak to members of MFS Investment Management executive team right after the company rang the opening bell just a few minutes ago. So stay tuned.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improve their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here on the floor of the stock exchange for a very special occasion. You saw the opening bell, and joining me now is Michael Roberge. He is the chair and CEO of MFS Investment Management. Michael, thank you so much for joining, and congratulations on 100 years.
Thank you.
What does that mean?
It's fantastic. It's been great for employees to really celebrate the 100 years. So MFS launched the first mutual fund 100 years ago this year. And what it did was democratize investing for individual investors to allow individual investors around the world to save for financial security.
The company has new product launches as well as we look to round out 2024. Walk me through those.
Yes, so we launched the first mutual fund 100 years ago, and 2 weeks ago we launched 5 on the exchange, 5 active ETFs. The ETF vehicle has been around for a while, but it's relatively new to fully transparent active capabilities. And we have heard from our clients where they want our capabilities in that vehicle. It's a tax-efficient vehicle for clients, so we decided to jump forward and do that, and we're super excited about it.
How does that align with the company's long-term strategy?
The long-term strategy is all about putting clients first, serving our clients' interests, and this is just one of the ways in which we do that.
Well, 100 years is a major milestone to celebrate. How are you going to be celebrating with members of your team down here today?
We were down last night. We spent the day today together, and super excited with some of our clients, and super excited to celebrate the 100th and then the launch of the active ETFs with the entire group here. It's been great.
How has client centricity really shaped the business for you over these years?
Ultimately, and the reason we're still in business after 100 years is we stay incredibly focused on how we can best serve clients. We listen to clients, bring financial products that meet their needs, and add lots of depth to the relationship with them. And if we continue to do that, we'll continue to be here for the next 100 years.
Well, congratulations again for our viewers watching as we approach 2025. What do you think they need to know?
I think they should be investing for the long term, diversified portfolios, and just hang in there with the market.
Long-term strategy. We like to hear that always. Michael Roberge, congratulations again. Thank you so much for joining. Of course, he is the chair and CEO of MFS Investment Management. Well, since we're down here on the floor of the stock exchange, let's take a look as to what is transpiring as the trading day is officially underway. We saw MFS ring that opening bell at 9:30 a.m. Eastern to celebrate the opening bell. And as we get underway, I do want to bring in my colleague, Trinity Chavez, because she has more. Trinity's going to join me here shortly. We're setting up what's going to be a very busy week, though, and that's because we get a Fed decision on Wednesday, 2 p.m. Eastern, and that is exactly what is going to define the markets this week.
Joining me now is John Garrett, Managing Director, Head of National Accounts at MFS Investment Management. Joining me now. Good morning.
Good morning, Trinity. Great to be here.
It's great to have you. We just saw you up on the Bell podium opening up the U.S. equity markets. Was this your first time doing that? How are you feeling?
It was just great to be there as a team. We just celebrated our 100th anniversary, so always been a company focused on innovation and putting the client first. And so to be here as one team delivering in that in our centennial year, launching these products, feels incredible.
Yeah, let's talk about more about this launch. What does it specifically mean for your clients?
So I think from a client perspective, it's really about choice. So choice through two dimensions. The first being we can take a vehicle agnostic approach. So if clients need the tax efficient structure of an ETF, separately managed account, mutual fund, CIT, we're really in a position to offer that for the first time, which just broadens and deepens those relationships. And the second aspect of choice is just MFS within the active ETF marketplace itself. Just being a pioneer in active management when we feel active management matters more than ever, and to deliver the capabilities that we are into the market, which really are these building block capabilities from an asset allocation perspective, we think just adds depth and choice within the marketplace itself.
And how has the initial reception from your clients been when these conversations first started?
So they're excited. So clients have been waiting for us to step into the space for some time, and we've been super thoughtful about what that approach has been. And so less being governed about the timeline that we did that, we wanted to get it right. And so as we've talked about these products with our clients, as we've told about the capabilities that they're familiar with, familiar teams, it's just given them a lot of confidence, which has validated our feeling that we got this right for them.
And what a way to end 2024. Talk to me quickly about your priorities going into 2025.
Well, 2025, this is just the beginning for us. But again, we've always been an organization that just focuses on the client. And so this is our initial entry into the marketplace from an ETF perspective, but we'll look to continue to build and broaden that out as we look at what other capabilities we can bring to clients. Because again, at the end of the day, when there's an intersection of getting clients the investment process that we can deliver based on the demand and their needs, that's where we're truly successful.
Amazing. Well, thank you so much for joining us. Congratulations again on this milestone. I'll let you continue the celebration with your team.
Thanks, Trinity. Appreciate it.
Take care. Now, elsewhere, SiliconANGLE's theCUBE and NYSE Wired are joining forces for the CFO Summit on the West Coast, broadcasting exclusively from the Palo Alto studios, and it's all kicking off today. Now, this event brings together top financial leaders in the industry and experts to explore modern strategies for navigating economic challenges, optimizing financial performance, and driving sustainable growth in the enterprise. These leaders will also speak to some of Silicon Valley's most influential CEOs and CFOs in the tech space,
space, including Proofpoint CEO Sumit Dhawan, who I also recently sat down with on Taking Stock.
Proofpoint focuses on cybersecurity and compliance. We provide what we call human-centric security solution, preventing against both inbound threats that are targeted on people and information leakage that occurs in the enterprise.
And you've experienced some momentum recently. I understand you have 2 major announcements that involve the expansion of your platform. Why don't you tell me about that?
We're enhancing, expanding our threat protection to not just protect against threats coming in via email, but coming in via any other way people may collaborate. For example, SMS, social media, iMessage, WhatsApp, regardless of how people are collaborating, our collab protection solution are going to protect them just like we protect an email. And secondly, our information protection solution, which is now becoming majority of Fortune 100 customers are using it. Yeah. We're extending that technology to protect against proactive and reactive way of managing the posture of all applications and identities. Yeah. This way, all these account takeover issues in both sanctioned and unsanctioned applications that happen can be protected via our platforms.
And you recently announced the end-to-end information protection framework. Talk to me about this and how you're really bolstering all of your offerings for your customers and what it means for them for the near term.
If you think about information protection, information security, information protection is the key for it. Now, the hard part with information protection in the past has been all of the prior technologies have taken a content-centric approach, as in like, hey, this document has to be secured. This document has personal information, so it must be protected. That's not practical anymore when so much content is being created. Instead, you have to really think about the intent of what people are trying to do, which can only be done using AI. And that's what we have built, which makes the information protection solution to be adopted and implemented in fraction of time, be much more high efficacy, and provide return in less than 5 months using our solution. Now, how do you do that in a repeated fashion? After learning from many customers, we decided to code up the best practices in a framework that any of our customers and our partners can adopt and really implement an information protection program in their own organizations with high speed and real quick returns.
Welcome back to NYSE TV Live. I'm Trinity Chavez on the trading floor. I am joined now with my colleague Kristen Schuller. As the end of the show, well, it's coming to an end, and it's been an action-packed show. I mean, we have retail data that we were talking about, especially as we're waiting for that data to be released tomorrow. It's going to be an action-packed week here on the floor. Looks like we got a lot of green on the screen. Kristen, as we're anticipating that Fed rate cut again on Wednesday.
That's exactly right, Trinity, setting us up potentially for that so-called Santa Claus rally. Those are the 5 trading days of this year to end this year and the 2 trading days to start the next year. Yep. Of course, an old adage down here on Wall Street, and we do usually see new money come into the market during that so-called Santa Claus rally phase. That's what my markets guest told me earlier. So we will have a lot of action on tap this week. You're right. A lot of economic data, the retail sales data tomorrow, as you mentioned, housing data as well.
And
the Fed.
Exactly. But overall sentiment here on the floor, by speaking to some of the traders, investor sentiment is very strong right now, and they anticipate that we're going to close out the year very strong and head into a very positive 2025.
Okay, we want to take a quick moment, since we are talking about celebrations here, and wish Ian Wolf, our director of broadcasting, a very happy birthday. We are one day early, but Ian, we are sending the good vibes your way to end the show.
Birthday.
Happy
I'm Trinity
birthday,
Chavez.
Kristen Schuller.
We'll see you next time.
reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.